The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another beautiful day at the headquarters of technical trading and investing. This is TFNN.com, and I'm your humble and lovable and squeezably soft servant at TFNN for the Power Trading Hour each weekday that there's trading from 2 to 3 p.m. So we've got a market that's trying to move out here, a little bit weird, a little bit strange, but to me, it looks a lot like the very end of options delta neutral. Didn't really start on Tuesday. Started kind of late yesterday. Looks to me like there's a little bit of a hangover. It might be because of the Fed next week. But as the market was pushed down to its lows today, which in the case of the S&P cash was 1772, they've been selling a great deal of the downside puts or options and trying to lay a lot of that off. Normally, you want to fade the other side of that when we see an options expiration week. And, of course, I don't believe a lot of the things I see on the Wednesday before the options expiration week because options market makers, who are for the most part owned by the big street names, need to go delta neutral. They need to have volatility, and normally you're going to see the big volatility days on those Wednesdays. Occasionally you will see volatility on the Fridays of expiration, but never as much volatility as you almost always get on the Wednesday the week before expiration. That gives them enough time, and the value of the option premium still high enough. They can sell arms to both sides, kind of like an arms dealer. They, at that point, they really, it's too close to call. The risk is too high. Was to sell arms to both sides, and no matter who wins, we're at least going to keep the amount of money we have now. So that's what option market makers pretty much do for the monthly options, and we continue to see them still being the dog and weekly still being the tail of options expiration. But what can you say? What we are saying is that the S&P is back at 1780. We're off about 2 points. It's been banging along technical lines that I don't spend a lot of time looking at, although I know a lot of people look at those 5,200-day moving averages. And some of those are at least what I hear from the talking heads on TV are talking those levels. We should have easily gone down to about 1760 today if this market was going to come apart. That we haven't, I suspect, sets up a slow and steady melt up. Somebody asked in the den today whether I thought that we were going to bounce. And I said I didn't think that that was the appropriate word. Bounce connotes some level of energy, a V bottom. And to me, this looked like it was just going to kind of stumble like a drunk, and not like a rich executive drunk, but I mean a full out-and-out Bowery kind of drunk. Kind of a little bit this way, a little bit that way, a little bit this way. And I think we're probably going to close back up a week from Friday, probably right around $1,800 on the S&P cash. I don't think that there is a whole lot of volatility left in this year. And we're going to get into some of the reasons why in a minute, but pushing just a little over 2 billion shares, so the volume is at least adequate for today, but not enough to really blow things out. And we'll talk about the volume yesterday, too, in just a few minutes. In this day, or on this day, in this day, It would be on this day in 1914. The New York Stock Exchange reopens after closing in July, amid jitters over the outbreak of World War I. By the end of 1915, the stock market has risen nearly 82% as Western Europe supplies its war effort with American-made goods and weapons. Most people don't even remember or don't even think of a time before they lived. But can you imagine that the stock market just closed in July and just reopened in December or January? Can you imagine that people would just take off for 6 months? What did all those people do back then for jobs? But this is a pretty quiet time. This was the start of the big run that would last about 15 years and culminate in the September-October blow-off top in the stock markets in 1929. In fact, a lot of the history I read about the stock market talks about probably the worst 6 years in the stock market, about 2005 to about 2012. Very, very tough to make money in the stock market. Almost all traders were focused on commodities. After years of having the huge market moves in the steel companies and the rail companies, most people don't even think that, we've got, 6 IPOs today. In the crash of the crash of 1929, there were only a little over 200 stocks totally trading on the entire stock market. Today, we have somewhere in the excess of 5,000 stocks that trade over 1 million shares a day and aren't on the pink sheets. And what can you say? But now we've got a market trading out here at 1780, and things probably could be worse. We were talking about IPOs. One of the things that came by was whether or not we would have yet another record year for IPOs, and we are now. We're a few IPOs ahead of the game. The last time we had this many IPOs was 1999, and that took us into the dot-com highs. And in fact, I think just a few months ago in 1999 was when the sock puppet Pets.com went public. No business model, no business plan, a sock puppet and an ad campaign, making a lot of people rich that they should have gone to jail, but didn't. But I'm thinking that maybe this is the foreshadowing of a market that is just too ripe with IPOs. Of course, today we had, did I miss it? Maybe it's it here. I must have missed putting it in here. Today we did have 2 major IPOs coming to market. Let me pull this up right here. It was Hilton and Aramark. Both of these companies were leveraged buyouts right before the stock market blew up in 2007. And they both raised $2.4 billion in the way of cash today for Hilton and $725 million for Aramark. A symbol for Hilton is HLT. Aramark is ARMK. Both companies priced at $20. Both were trading up about 8 or 9% today. But there are no Twitter. There are no, well, thank God, no Facebook. But not a bad deal for these big, large companies. But when we look at companies, and we haven't had a lot of LBOs lately, but when you look at companies like Dell, I can only imagine that everybody that took Dell public were thinking, well, in a couple of years, we'll just bring it back. I don't think anybody involved in the leveraged buyouts of Hilton or Aramark both thought that it was going to take a good 6 years to come back to market with these things. I think that they were all thinking 2 or 3 years, but they've sat on this money for a while, got their cash out today, and we'll see how Hilton and Aramark goes along. But both of these did make it out the door, which makes me think that there's still lots of cash, at least enough floating around on these IPOs to attract some sharks in the water. They're chumming it enough, but we'll keep an eye on it. We were talking a little bit about Yahoo yesterday and how its CEO probably going to be a little bit of Teflon on her because, face it, she's attractive and young. And it takes a little while to get to dogging on those folks or actually criticizing them in any way. And kind of interesting today to actually see some of that also, and the fact that I think Yahoo's probably, PR-wise, has probably had the worst couple of days they've had in 6 months. And the reason I say that is yesterday their email service had been out pretty much all day long. Today, about 11 o'clock this morning, their Flickr service, which is their service for pictures, was down. But guess what? They're still up. This is one of these companies that probably can't do anything wrong because it has nothing to do with Yahoo. If you missed my discussion yesterday, it's all about one thing, and that is Alibaba's IPO. And we're probably going to see this stock do well until they sell their shares of Alibaba, which is probably going to be the biggest IPO of the first couple of months of next year if the wheels don't fall off the wagon of the marketplace. But how can you have such a bad 2-day run of PR and see the stock up 1.5% on a day that's pretty tough? Mostly it has nothing to do with Yahoo and everything to do with Alibaba and that IPO coming out from Yahoo next year, of which they own, I think, 27%, 26% of the stock of Alibaba. Anyway, that's the news. Kind of a quiet day for news out here. You can always give me a call at 877-927-6648, 877-927-6648. I'd love to have it. If you can't get to the phone today, you can always email me at path@tfnn.com. That's PATH at tfnn.com. I'll try to read your email and also respond to it as we have time. Let's see, anything going on in the win-win. Okay, that's it. We've got Andy Heck. Normally, he stalks me on Tuesdays and Thursdays late in my show. He's getting a little antsy here, getting a little started just a little earlier today. Of course, he'll be talking a bit later. I've got a couple of questions for him. We might see if we can get those. Anyway, we've got a phone call, so we're going to go directly to that. When we come back, from the break, but we'll take a minute. Anyway, give me a call, 877-927-6648, or email me at path@tfnn.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, just a quick look at how Europe closed. UK was down 1%, Germany off 0.7, France was off 0.4, Spain was off almost 1%, Italy and the Irish were off about 1%. So pretty much a following of our move down of 1% yesterday. And I suspect they'll probably have a little bounce out of there tomorrow on our selling. But what else do we have going on here? Wanted to look at a little bit at gold. Got kind of yelled at by one of our customers. Maybe he didn't mean it. Maybe it's just me thinking he was kind of upset. Calling in about buying some gold miners. What was it? Last week? I think it was last week. And I said, well, I keep on thinking gold has got to come back down here at least one more time, and there still isn't enough discussion about the end of gold. I suspect that what we're looking at in gold is the last wave of an Elliott wave 5-way system setting up. Now, generally what is characteristic of the bottom and last part of the fourth wave down is that there is extreme pessimism that the stock or market on the fifth wave basically gets washed out just before the end. the market on those tend to not have a lot of the same characteristics that the previous four waves had. One, you don't get a lot of times a lot of signs of strength. You get a washed out market. It goes sideways for a little bit, and then it starts going up just a little bit each day, just a little bit each day, just a little bit each day. There's no real huge day where everybody goes, woo, I'm glad to be in gold. It's kind of a, we just expect gold to go up $5, $6 every day. And you wake up one day and gold's $1,800, $1,900. It's back up to the old highs. Another year goes along and suddenly gold's $2,400. And I think what we're probably looking at in everything that I'm looking at is the possibility that we do have that setup. But what you want to get out of that fourth wave in an Elliott wave setup is that giant washout. You want the people that have loved it the longest to hate it, and to be cursed that the shiny yellow metal ever came into their life, or they ever bought anything with it, or that they ever invested in it. And I think we were probably fairly close to that, but we probably need another 40 or 50 points. We need wailing and gnashing of teeth. We need a great deal of pessimism. And why my questions last week to the caller were all about that. He wasn't really, I got the feeling he wasn't really interested in it. He was very interested in thinking that gold had made a bottom technically, and it had. The charts looked good, and he went long. And you had a nice bounce out of it. Hopefully you sold it and didn't ride it all the way back down. But we've got gold off at $30 today. There's one thing that sets gold, I suspect, apart from almost everything else we trade, and that is the amount of retail investors in the gold market. It is so small, the gold market, that most people can't get in on the street and play it. They just have far too much money. They need something that they can go drop $2 or $3 or $4 billion in. And since the exits are narrow, if they went to buy $5 billion worth of gold, it would probably raise the price significantly. And when they're ready to sell it, they can't sell it without putting the price of gold down significantly. Gold market has gotten much bigger than it has been in the past in the gold bull runs. But this is still a huge problem, and that means that we're playing with less experienced traders. And for the most part, those traders will not give up the ghost until they are squoze out. And that means that at the very bottom, they're going to throw in the towel on this market. We're going to see it with probably the highest volume in the gold contract and in the GLD we've ever seen. And I think we're probably going to see that right around the first of the year. So we may have another couple of weeks to sit on our hands. No big deal. But patience is really going to be it on gold. I know everybody wanted it to go up, especially around TFNN. We're all tend to be gold bugs. I'm not short gold, nor would I be short gold. I'm not real happy of ever being short anything where a nuclear bomb can come off and the price would be up 5 times tomorrow. You know, if we started seeing nuclear weapons lobbed around the world, I wouldn't be surprised to see gold at 5,000.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, I had an email. And, of course, when we get emails, we always do the same thing.
You've got mail.
Yes, I do.
You've got mail, baby, yeah.
Yes, I do.
I got mail, yay! I got mail, yay!
Yeah, I got mail. Anyway, Martin from Ottawa, Canada, is asking about Allied Nevada Gold Corp. ANV is the symbol on it. And like I said, all these charts are probably looking fairly decent out here. The one things that I don't like about it is we're looking for this light volume move back below and a close back above. And what you really want to be looking at is a close and confirmation above $3.54. That goes back to our low of August 9th of this year. $3.54, 7.7 million shares. So you try to get into it, but a few cents short on October 4th. High volume low, you know it's going to get tested. We have closed below those. We tried to get back above those. We had lighter volume, 5.1 million shares, but to me, I want to wait for about half that. So what you're really looking for are lows in the range of about 3.5 million shares. And, you know, we've got, 2.2, and we could probably base, I'm almost thinking that we can base out here for a couple of weeks. But again, I think maybe we're in the last leg of a 5-leg system, and that characteristic is not the V bottom that everybody talks about almost ad nauseum, because that's the way every other bottom in gold has been. It shakes everybody out, and they instantly buy it and expect the price to go up a few $100 in gold. That last leg of a bull run has those characteristics that I talked about, which is nobody believes it, a lot of pessimism, and very steady, slow but sure move all the way up, just every day. I don't know how many people remember the housing markets before they actually croaked. But when you look at the last legs in those in 2007, when you look at some of the banks in that same sector, you saw that last kind of leg characteristic up in the market, which is the belief that you were just never going to have a down day. Now, part of the problem, I suspect, may be that the weakness in the general markets too, and the lack of wanting to get into a market at the end of the year. So I'm basically saying I'm going to probably be thinking about buying gold around the first of the year, but think that we probably have a good time for some vacation, spend some good quality time with our children and our friends and our loved ones. And I probably don't have a lot of impotence to be going out and putting on positions before the end of the year. Now, maybe we get a huge change in the Fed speak next Wednesday at 12:45. I suspect not. I suspect we probably get kind of a little bit of everything for everybody on next Wednesday, and then we probably get the trickle. Is that what it was called? I think it was the horrible medicine people. Treacle? Yeah, treacle. The horrible medicine kids used to be forced to take, like castor oil. I think treacle was the other one. But I think we're probably going to get that nasty tapering news in January, and kind of the good cough medicine next Wednesday. So people are probably going to all talk about it. I think the market's going to slightly move up on the S&P 1800, 1825 maybe at the end of the year. Nothing really to write home about. But what we're probably going to be looking at in gold is it starting to build up some steam and make a bottom. But I'm still looking. I'd love to see one day down $50 and a intraday reversal in that, and then maybe for it to go sideways for a week or so, and then slowly dig out of these lows. We talked about all the organic reasons why a gold market could sell off into the end of the year. Things like tax selling. You could still sell gold today, buy it back on the 12th of January, and not incur your wash sale rules. So you could write these losses off. A lot of people that got into gold got into it at the highs, just like every other market. People can't wait to buy at highs. But we're getting 2.5 million shares today already. So are we going to start seeing those kind of 3 million share days? I hope so, and that's what I'd be looking for in Nevada gold. We had a caller that couldn't hold on, but he wanted to look at dust, and I guess get my opinion on it. Didn't say what. We've had these kind of moves, but the same thing as GLD. There's a nice high out here, and I think we're probably going to go tag that over the next few days. That's the August 7th high in dust. That'll take you to $53.50, 2.3 million shares. Now, what do we have today? 3 million shares already on the way there. And off a good $30 on the $28.90 right now on the actual gold contract itself. But we've got a little gap here, kind of touched it on December 3rd. We're probably going to come back and hit that, I imagine, in the next few days. In fact, this weekend would be a great idea of just where gold is going to go. Going into a long weekend with gold headed down, it's going to be very interesting how this market trades in gold the next few days. Again, I'm not jumping up and down waiting to buy gold. I think a lot of patience here is what's called for. Yes, Andy Heck's making some comments. Gold below 1,200, it will be all the news. And I hope people ringing and ripping their clothes, saying that gold is dead to me. I will have no more point of this shiny yellow metal in my life. And about the bottom of that, probably be the time where we want to buy it. But not a whole lot of movement in that. I think we've got some more stocks to look at today. So let's take a quick look. What do we have here? Hang on a second. I had some of these charts in my newsletter this morning. I wish I would have looked at this one a little harder. But this certainly, we're starting to see a lot of these stocks. This is what I was kind of looking for, at least for a bottom out here today. Braxis Petroleum Corporation, AXAS. This had a nice pop-up with decent volume. I didn't like the candle all that much on the 6th of November, but this thing popped up with 3.3, almost 3.4 million shares on the 6th. It's ran up. It came back in with a little lighter volume yesterday, 3.2 million shares compared to that 3.4 million shares. I would have liked to seen a lot more, and why I didn't spend a lot more time on it. But we're starting to see, as a theme of the charts I sent out in the newsletter today, the path of least resistance, pretty much a level where we're going to see a lot of these gaps up on heavy volume tested over the next few days. And I suspect tonight we're going to see a lot more. Some of the other stocks, and probably some of the worst performing stocks, have been in the REIT business. Biomed Realty Trust sells a lot of REITs and paper to the medical community, especially a lot of companies in the actually trying to come up with these cures. This one's kind of interesting today. It's coming back into the lows. Hasn't tested it, but I suspect we've got a very light volume day today, and looking kind of interesting out here. The August 21st low, $17.90, 2.5 million shares that day. We're still about 7 cents above that today, but the volume today is less than 500,000 shares. This is the kind of stuff that really gets me excited. Of course, we need just a nickel down. I know we're in these high volume lows over here on the left-hand side of the chart. I still want it to prove the point. I still want it to go below that 1790. I want it to close back above that 1790, and I want this volume to remain light like we're seeing today. Maybe we end up with 700,000 shares today by the close. But when we're looking for some of these at the lows, you want to see the volume really dry up. Yesterday's volume, 2 million shares, still not too bad compared to the 2.5 million shares. But I have a feeling that we're probably going to, especially getting this time of the year, it's going to be a little tougher. Cliffs Natural Resources, another one of these stocks that jumped up on heavy volume. This did it on October 25th. I think that was an earnings date for it. 19 million shares that day. This thing's meandered up to $28.98. It's done its nice slow pullback, which is exactly what I like. I would have liked it probably not to go as low as it did, but 4.8 million shares compared to that 18.9 million shares. Pretty good indication that we're probably finding a level of support in some of the weaker companies. Of course, Cliff Natural's big into iron ore, a lot of these other commodities, but maybe we'll get a comment from Mr. Andy Heck following this show. Of course, we had some other ones that are coming back into their gaps. Today we're seeing Randgold come back into that level. I'd love to see Randgold come back out and test its July 10th low, $60.17, 1.8 million shares. This thing gapped up that next day on 2 million shares. So coming back today on 600,000 shares is absolutely perfect, and these charts look good. I just want it to prove the point. And I keep on repeating that phrase, prove the point. There is a reason, and that is that price and volume trading pretty much started in the 1905, 1910 range with a guy named Wyckoff. He had a lot of terms for the way things worked. he called proving the point, breaking a previous high or low, doing it on a whole lot lighter volume, and then closing back into the range. To him, that was a signal. That was proof that we were back in. Now, we've got sort of half the proof or the truth of the movement here today with the very light volume back into that high volume gap up. But at the same time, do we have to get all of that filled? Not so. But again, I'm going to go back to my treatise earlier in the show that this is a market where we're looking for that washout of the previous lows. And two, I could see a volume, even though we've got light volume today, I could buy something like Randgold if it had 10 million shares as it blew through $60.17. If on the next day it closed right back up on above $60.19, and we saw that huge volume come in, that would indicate to me that we had an exhaustion move to the bottom. Either light volume or super heavy volume, especially in this last leg of gold, would be very nice, I think. But what we are looking for is some sign that either all these people have been washed out or that nothing that anybody can do is going to get them to start selling gold down at these levels or gold miners. And, we're in this gap, and we kind of went into it a little bit today. Volume is light. It's probably going to take another couple of weeks to get this thing down to that $60.17. And at that point, we can really start looking at it. Okay. I'm just looking at a few other things, seeing if anything is actually moving out here. Still seeing gold at 1227.90. We're still looking at crude, basically flat, 97.41. And anything else on this market? Take a quick look at volume as we look at it. And, we're off 2 points on the S&P cash, 2.3 million shares, or excuse me, 2.3 billion shares on the consolidated New York Stock Exchange tape. Makes me think we certainly don't have a lot of energy. Now, early in the show, I was talking about heavy volume in the last few minutes of the trading day. And that's what I'm going to be looking at today to see if we get this exact same thing. We had about 2.9 billion shares with about 10 minutes to go in the end of the day. We ended up with about 3.5 billion shares within the last 10 minutes. So we had an absolute torrent of volume coming in right at the end, and that's what we're going to be watching for today. Does that come back in that day? Do we see a lot of volume dumping right at the end? Do we see weakness at the end of the day, or does it just kind of fizzle out and we see this market start drifting up till that Wednesday 12:45 announcement by the Fed? I suspect that's what we're going to do. And again, a couple of days that I don't believe a lot of what happens in the market. That is the day that they go delta neutral, basically 8 trading days before the end of expiration. And the opposite side of that is expiration day itself. Both of those days tend to be counterfactual to the market direction or even the medium or even short term of the market. It has a lot more to do with those options expiring. Let's take a look at other stocks of interest. TDC, here's another stock. Like I said, a lot of these stocks are starting to break through these lows and what is called prove the point. Teradata is one of these. The last major low out here had 8.3 million shares, $41.11. That's the October 16th low.
69%.
market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops?
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Not in the next few weeks. But interestingly enough, in the den, we're talking about gasoline prices, crude oil prices. And what would happen if we had $80 crude? Certainly, I know the price of production in Russia could be enough to bring the new Russian Federation to its knees. A little less clear whether Saudi Arabia would have enough cash coming in. When I read right now, they're kind of at the break-even point. Much lower, probably lower than 90, would be problematic. I don't know if that would make it implode. It would be difficult. A lot of the money that they get from oil is basically paid off to a lot of people in Saudi Arabia to keep them from going all al-Qaeda on them. But commodities are a very interesting business. Of course, Andy Heck stalks me on Tuesdays and Thursdays. We see him peering around the corner about this time, and he'll be following me shortly. And that would be it. So other things going on in the marketplace is just we've probably put in the low, I suspect, of the expiration week. I don't think we're going any lower than 1772. We may have some volatility on Wednesday with the Fed, but I suspect we're probably going to just kind of stumble up here for the rest of the day, probably into Friday and Monday and Tuesday. I could see us being up around 1800 or 1795 on Wednesday, maybe go a little above it. And I think we're just going to stumble around this area, and then probably the last 5 to 10 days of the year kind of maybe go up to maybe a high as 1820. I don't think there's an impotence to really put a lot of juice into this market before the end of the year. And I'll be looking at buying a lot of puts probably at the end of this year. But even today on the push down, we're at the end of my show. Less than 2.4 billion shares on the consolidated tape. Just not enough to really pull the wheels off the wagon of this market now. You basically have one probably big shot at shorting this market, and that would be on Wednesday if they do some kind of full tilt boogie taper. But my guess, again, is that we're probably going to have a little bit of sweet tasting cough medicine before we get the treacle in January. So that's it. Anyway, you can always give me a call at 877-927-6648. A little late in the day to do that now. You can always email me. And, of course, tomorrow I'll be in a studio, so you'll see my smiling face. And we'll be talking to Tom in the 4 o'clock hour about technology. And got a lot of stuff going on in technology this week, so we'll be looking at that. Kind of interesting to see a lot of people bad-mouthing Microsoft here the last few days. In fact, I saw somebody just today doing it. MFST. Microsoft. Guess if I can actually type it would help. Anyway, I got to get somebody's chart off of mine here, but we'll be looking at it. Anyway, we'll be seeing you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.